Ladies and gentlemen, whenever I first started getting into SoFi and learning all about the company, the person that I looked to was Kuran from the Fin Tek channel. He was all over this space very early on in SoFi's journey, and probably one of the biggest YouTubers at the time covering this topic. We are all lucky to have him here. Really appreciate you being here, Kuran. How has everything been on this journey? The stock has gone down a little bit. It's been running up. How have you been doing?
Yeah, such a nice intro. Yeah, I really appreciate it. I'm glad to be able to watch some of those early videos. I mean, look, investing in SoFi has been a wild ride. I've been like watching since the beginning. And SoFi, I always like to distinguish between SoFi as the stock and SoFi as the company because I feel like they're just fundamentally different things.
Yeah.
SoFi as the stock has been completely crazy and like up and down all over the place. SoFi as the company has been a little less worrying. That's been like a little bit more fun to watch.
Yeah. So, with the company, when did you first start looking at SoFi? Like, was it IPOE that you were first looking at this, or like when did you first start getting in?
Yeah, so I don't know how much context I need to provide to your audience. I think they're probably pretty used to SoFi, but maybe just like a 30-second recap. So SoFi started out way back in 2011 as a private company, and it stayed private for most of its history. It left one CEO when he was kicked out for harassment. And then in 2018, they brought in their new CEO, Anthony Noto, and he's kind of the guy who's the driving force behind SoFi as we know it today, and like their public-facing company and listing on the stock market. So back in 2019, 2020, there were a bunch of SPAC mergers happening, which is basically a roundabout way to take a company public. The idea was that you could take a company public without having to go through the whole initial public offering IPO process, which is really expensive. And it also cuts out kind of normal retail investors like you and me. So the idea was you take the company public by merging it with another company. It's like, I think the company they merged with was called Keto Sophia Capital Holdings 5 or something. It was done by Chamath Palihapitiya, who was really big in the SPAC space. And it was great because you got these companies coming public for a lot cheaper than running through an IPO. But there was also kind of a bad side to it, and that a lot of the companies that went public via SPAC were super hyped up. It was kind of like the GameStop mania was happening around that time.
Yeah.
A lot of companies that Chamath was taking public would end up spiking up, 3-4x really quickly, and then collapsing when it turned out maybe the company wasn't as good as it looked on the books, or sometimes the company turned out to be totally fraudulent. So the reason I got interested in SoFi is because I was covering a lot of these SPAC companies. And SoFi stood out in that it was the one SPAC, at least the one that I was paying attention to, that seemed like it had a really solid business behind it. And I was really interested in that because it was actually a good company. It was a mix of finance and technology, and they actually had a real business to back up the numbers. They weren't just riding on hype. But that's also why I say there's a big difference between SoFi the stock and SoFi the company, because the stock price has been kind of affected by that SPAC status ever since it first went public.
Right. Do you ever think that, we will ever get out of that sort of stigma of being a SPAC company? Like, That's what I sort of thought people would change their mind on whenever we became a nationally chartered bank, right? That would completely change the way people looked at the company, but it still didn't. The stock continued to fall. What did you think about, or what do you think about the idea of as we continue to grow over the next 5+ years? I don't know what your timeline is for holding this company. I'm assuming it's long term. What do you think about that?
Yeah, I mean, it's a good question. So my timeline when I invest in any company is usually 5 to 10 years, and then longer ideally, if I can keep the company that long.
Yeah.
And yeah, it's a weird thing because I kind of thought SoFi's SPAC status would die out at the end of 2021, start of 2022. Like I thought it would die out pretty quickly, but it clearly hasn't. Because for a long time, SoFi was trading at $4 a share as early as the start of this year. And to me, it didn't really make any sense. The business, just the fundamental book value of the company was worth over $5 a share, and they're trading at less than that. So that was basically implying that SoFi was worth negative money being together as a company. And the only way that would really make sense to me is if people were still worried about it because its association with SPACs. So, I mean, I don't know how to forecast when it's going to lose that reputation. Honestly, SoFi still has some very dedicated communities online. Like, you have a community that follows SoFi.
Definitely.
There's a subreddit. And I think that it's kind of a double-edged sword where that community probably came about during the SPAC era. And so it's always going to kind of maintain that connection to the SPAC era. But at the same time, you have this very passionate base that kind of follows this stock and really cares about the company. So it's a double-edged sword there. I don't think it really matters that much. I think that fundamentally, if a business is strong enough, eventually the stock price is going to have to catch up to it. I mean, Warren Buffett has that quote. It's like, in the short term, the stock market's a voting machine. In the long term, it's a weighting machine. And SoFi eventually is going to tip the scales. So we'll see when that happens.
Yeah. More specifically, diving into the company, you break down a lot in your videos that this company is technically in 3 different bubbles: financial services, technology platform, lending services. What obviously most people would say that lending right now is the large bulk of SoFi. It's hard to look at it any other way.
Definitely. How
do you weigh the technology platform right now? It's a very small portion, but the expectations are extremely high. All of these segments should be getting to 33% each. Are you still expecting that same timeline that this will be a 33% split between all 3 segments, or how do you look at the 3 different segments of SoFi?
Yeah, I think that one way to look at the segments is in terms of timeline. So the lending business is obviously extremely profitable right now, and it's basically carrying the rest of the business. And I think that in the short term, we're still going to see most of the profitability growth still in the lending segment. There's obviously still a lot of opportunity for student loans and home mortgages to pick back up. But then I think you have to look to the medium term and then the long term. Medium term, I kind of put financial services there, even though that's the one segment that's losing money right now. I think on their last earnings call, Anthony Noto said that financial services had finally achieved variable profitability, which means they're like on the way to becoming actually profitable. And then I think in the long term, tech platform is probably going to be the biggest driver behind SoFi, because strategically it has like the longest vision overall, becoming the AWS of fintech. If we look at Amazon back in, what was it, 2008 or something, when they started AWS, 5 years before everybody else, that was the big strategic differentiator between them and all their competition.
Yeah.
Once they started that, nobody could catch up with them. And I think it's going to be the same with SoFi.
Yeah, I mean, even in the short term, if you look at it, it's helping with our expenses. In the long term, it's helping, as a revenue driver as we connect with all these financial institutions.
Definitely.
So let's get a little bit more particular. They said recently that they're in talks with 12 large financial institutions to try to get in, on the platforms of Galileo and Technisys, and whether that's for their buy now, pay later platforms or for their core and ledger processes or something like this. Do you think that we will be landing a large financial institution in 2023, for example?
I don't know if I'd speculate on whether or not they will land someone in 2023. Frankly, I don't think it matters that much, because I don't think the stock price is going to care that much if we land a single large company. I mean, it's good to prove that the platform has credibility, but I think we're already seeing SoFi's credibility growing naturally in the market. I mean, they mentioned that they're cutting marketing expenses, and yet they're seeing SoFi's brand visibility getting larger. That to me shows that SoFi is becoming legitimized, whether or not they have, one large bank to legitimize them officially, I guess.
Yeah, there's so many things about this company that I want to ask you about. Like you brought up Anthony Noto. For a lot of people, this is the sole reason why they're investing in the company. Is this a large driver for you? Like, is Anthony Noto the we trust, trust in Noto type quotes? Like how do you feel about the current management?
I mean, I love Noto. I love the fact that he's such a boring guy, which sounds like a bad thing, but when it comes to banking, so SoFi's old CEO was very flashy. He got in trouble with that. He was a little bit too flashy, and he got kicked out for harassment. Anthony Noto, if you listen to his interviews on CNBC, he's just perfectly level. Sounds like he has everything pre-written on like the inside of his glasses or something. He's just like reading it out. I don't know how he does it, but he has that really stable base that I think is important for a company like SoFi. It's so easy for SoFi to get hypey and to kind of jump on the next thing as a fintech company. And Anthony Noto is just like that, the adult in the room, just the leveling of the playing field. He's like, listen, we have a good strategy. We're just going to follow that strategy consistently month over month. And after 5 years, we'll be, 3 or 4 times bigger than we are today. That's the strategy we're going to follow. And so I don't think, Noto's not that huge charismatic personality like an Elon Musk. Yeah. So that way, I don't think SoFi is as at risk of the key man risk of Noto potentially leaving, but he's also definitely a super valuable asset for SoFi. And it'd be hard to replace him with someone who's as qualified as him.
Yeah, and he's still quite young in his career, right? And it definitely seems like a very driven individual. He's wanting this to be a top 10 financial institution in the United States. It's incredible, the ambition. that Noto has. But yeah, just so many things. So now SoFi is kind of, we're seeing in the stock price right now, they're shifting sort of their business model. Before it was all personal loans because their home loans and student loans were quite down. Now it's looking like student loans might return August 30th. We just acquired Wyndham Capital.
Yeah.
What do you think about all the segments coming back on board and what that can do to the stock price?
I mean, it's super exciting. Basically, Noto in the most recent quarter just said that personal loans were basically covering for their student loans and their home mortgages. So like everything's falling and personal loans is holding it up at this point. I think student loans were down something like 40% year over year, and mortgages were down 70% year over year, which is insane. Mm-hmm. So yeah, student loans coming back on board is amazing, because what effectively happened is there's this giant hole dug out of SoFi, which we then filled in with personal loans. But now that hole is full and student loans are going to come back, which is just now building a mountain on top of what was formerly a hole. Then, 2 years from now, maybe mortgages will come back. That builds up the mountain even taller. And you're starting to get to the point where SoFi just becomes this like unstoppable profit churning machine from this lending business that they're building effectively when times are bad. And then they'll just profit when times are good, which is just awesome to see. It puts them in a really great spot.
Yeah, no, 100%. I couldn't agree more. And then another part too is how fast we can actually acquire those customers to then offer those loans. Sure. Right? Because if we can get people in top of funnel, like SoFi Money, SoFi Relay, SoFi Invest, the cheap ways to get people on, then we can cross-sell them onto all the really big revenue drivers like personal loans and student loans.
Yeah, definitely. And
so Noto,
go ahead.
Oh, no, I was just going to say, Noto recently said that he thinks that, I think it's 2024, 2025, after they hit profitability, that he's actually wanting to get roughly 800 to 1 million new customers per quarter. Yeah. Like, what do you think this is going to do to, SoFi's actual business? Like, because the longest time we've only seen about 400,000 new members because we're still not profitable and they're trying to hit that target. Yeah. Or do you have a different, maybe I'm pushing my perspectives onto you. How do you sort of take it whenever you look at, where member growth has been kind of slowing down and they've just been kind of hitting the exact same amount of members?
Yeah.
How do you look at that?
So I think there's kind of two ways we can look at it. First, if we just kind of take it back to first principles of marketing and business in general, how much can you spend on marketing depends on how much money you can make per customer. So up until now, they spend all their marketing on financial services, and then it takes them 12 to 24 months to recuperate that cost from the different parts of their business. But Noto just said that now their variable profit on financial services is positive, which means that now they can actually acquire a customer and immediately they make money just on the product they're adding them to. So I think you make like $45 per product on average in financial services, so they can acquire a customer for less than $45. Now, as they can improve that profitability, eventually they're going to get to the point where financial services is just profitable, period, including the kind of fixed cost that they have to deal with. Once you get that done, you're able to ramp up marketing basically as much as you want, because the more money you spend on marketing isn't actually a cost. It's just making you more money immediately. So that's one avenue to view it through. So I think that is going to massively increase the inflow of customers into their funnel. The other factor is the number of products that each customer has. So right now, I think it's 1.5 products per customer is on average what they have, which is pretty low. But that's just because they're getting so many new members onto the platform. So there's almost like once SoFi kind of saturates their member market, they already have 8 million people a quarter coming in, which is a crazy number. But Noto's confident. Once you have that happen, you still have sort of a second life in SoFi, where you go from every customer having 1.5 products to having 3 products, to having 4 products, to having 5 products. And that is a whole second wind of growth that's just built into the business model as it is right now. Super cool to see.
Yeah, no, it's extremely cool to see. And that's sort of the amazing benefits or compounding effects that a bank can have.
Yeah,
especially the amount that they're pushing direct deposit users. Like, that user might stick around for a very long time, be a very sticky customer, and then they continue to roll out new products. Like, we just saw SoFi Travel out of the SoFi credit card product.
Yeah.
Which, is a great product if you're looking to travel, higher cash backs for the customers and everything like this. I've been meaning to ask also, are you a SoFi customer?
So I use the SoFi app. I'm not set up with direct deposit. I've never used any of their loan services. I wouldn't classify myself as a as a SoFi customer in the way that SoFi considers themselves customers.
Right.
The whole goal is to have a member, have them be their primary bank account. SoFi is not actually my primary bank account.
And do you disclose why that is? Like, why haven't you chose to make that 4.3%?
It's a good question. I mean, I think the big issue is that SoFi hasn't pushed me hard enough yet. So I kind of fit well into SoFi's demographic of users, young professional. That's basically who they're targeting to use. And I am a slow person to switch platforms. I consider myself, if you have the 80-20, 20% of people are super easy, 80% of people are somewhere in the middle. I'm in the last 20%. I'm one of the people who's hardest to switch platforms. So I'm not going to switch platforms just because I talk about SoFi. I want SoFi to convince me to switch platforms. And everybody can know if I switch to SoFi, that's a really good sign for SoFi because they've somehow convinced me. I just have a lot of momentum that's required to get me to change.
Yeah, no, and they're still trying to roll out new things, and whether that's even like some people just won't switch because they're not really integrated well with Zelle right now. And so if you pay a whole bunch of people through Zelle, then you're going to want to have that before you make the switch. And I think a lot of people look at it like APY is the only reason why people want to switch their bank accounts. But really, it's a lot of the functions.
Yeah. And it also depends. I think one of the things that people also might not consider, which maybe it isn't that big of a factor because a lot of their customers are young, but it's also the relationship with your bank. So, my bank in particular, I had a home loan through them before, so they're more likely to give me better rates in the future. Now, SoFi can try to compete with that, but the fact that there's an existing relationship there, they have to not only provide slightly better services than what they have to go substantially over to break that relationship and make it worth switching over completely, which I think is doable. But in my personal case, I don't think they've actually gotten there quite yet with SoFi Money.
Yeah, no, and it just goes to prove how sticky a customer can be with their financial services relationship, right? Definitely. And so knowing the amount of people that we are getting with SoFi Money, the next competitor to come needs to be that much better to rip them away from SoFi.
Exactly.
And that just goes to prove how, the revenue can compound on a single client. I think, sorry?
It's a good strategy. SoFi's got it down.
Yeah, and we're a nationally chartered bank. This is another thing that I've been really thinking about for SoFi is if rates start to either, I guess, stay stagnant is not really what we're looking. But if the federal funds rate starts to actually drop, right? Noto has been adamant that they'll be able to hold the rates better than most players here.
Yep.
And I believe them. I don't think Robinhood or the likes of any of these other cash management accounts with higher rates that also have to pay a sponsoring bank to actually have that deposits there will be able to keep up. And I personally, because I've been there, as an average individual, whenever a certain bank is raising rates or lowering rates, you don't know why they're doing it. It seems like whether they're being greedy or nice to you.
Right. And so you had a bad day, he's lowering rates.
Yeah. So if a lot of these banks around them are lowering rates, they're going to look to SoFi and be like, okay, well, I'm just going to stick my money there because they're the only ones that haven't changed.
Yeah. So the idea even of what is it called? So credit card churning was really big a few years ago.
Yeah.
I think the rewards on credit cards aren't as good now, but I think that bank deposit churning is kind of a thing now where someone will deposit a bunch of money into a bank, get their initial reward, then jump to the next one. So SoFi is actually competing really well in terms of just comparables between banks like that. So APY. So yeah, I mean, in terms of exactly what the SoFi Money offers you on the surface, not even including their whole back catalog, SoFi is pretty competitive already.
Yeah. So another thing that's very big with this stock is obviously profitability.
Sure.
And I also have another one on top of that, but actually I'll just stick to the one just so we stay a little consistent. Profitability aimed at Q4 of 2023. Do you think that's what you're looking at too? Do you think potentially that's a little bit sandbaggy because Noto has done that in the past with guidance? What are your thoughts?
I mean, Noto is always going to be conservative. So if it doesn't happen in Q4 2023, I'd be very surprised. It's going to happen then or earlier, in my opinion. The only reason it wouldn't happen is if something crazy happened with student loans and that just didn't pan out or something. Other than that, I'm guessing that they just have a projection that shows here's how many student loans we're going to have. Here's roughly how many people are going to refinance. That just falls out to the number that's needed to make us GAAP profitable.
Yeah, yeah. Another big red flag was stock-based compensation.
Sure.
Paying a lot of executives very, very high rates for a long time. That seems to be coming down. I I might have a chart, but what are your thoughts while I just bring up this chart about SoFi's stock-based compensation?
I seem to remember the conversation around stock-based compensation first got really loud. I don't know when it was, maybe 10 months ago or something like that. There was a lot of people who were very skeptical about that SoFi was spending so much on SBC, but I don't know. I never bought into that heavily because a lot of their metrics were showing that they were actually decreasing stock-based compensation. I made a whole video on it that went into the specifics, and I don't actually remember the details of what I said in that video, but I do remember that it seemed kind of overblown at the time. And now we're seeing their adjusted earnings are now higher than their stock-based compensation.
Yeah.
I think that trend is probably correct. I don't think that this is going to become a major issue in the future. And I think it was probably overblown to begin with.
So I think it was right around here whenever some of the articles started to come out and scare people that stock-based compensation as a percentage of revenue was like 25 or so, or to 26% of revenue. It was crazy. And then the bears were still able to continue to talk because in absolute numbers, the numbers continued to climb.
Sure.
But then around Q3 of 2022 and beyond, the percentage of revenue continued to drop and the absolute number continued to drop. Yep. And now Chris Lapointe, the CFO, is saying that as a percentage of revenue, stock-based compensation will be in single digits, I think, in 2024 at the earliest. So, yeah.
Yeah, and I don't think there's any reason to doubt what the CFO is saying. CFO is usually a pretty straight shooter. Again, these aren't incredibly flashy guys. They're pretty conservative. So if he says it's going to be single digits, it's probably going to be single digits.
Right. Yeah. Is there anything else that, potentially really captures your attention whenever you look at SoFi, or how do you really value this company? Is just because it's an unprofitable company, should that be as much of a deterrent as what a lot of people are saying right now?
In some ways, yes, and in some ways, no. So I think that as we're entering an economic downturn, it is important to take a shift from, purely a growth-focused mindset toward a mindset focused on value. But I don't think profitability is necessarily the only indicator to look at. I think that free cash flow is a really good indicator, and the fact of whether or not they're losing money quarter over quarter is probably a better indicator. Because as long as you're making money quarter over quarter, even if it's not profitable according to GAAP accounting standards, you are still making money. So there's no way your business will go out of business as long as you're making more money every quarter. Now, are you having a dilutive effect on the stock price by issuing stock-based compensation that drags down the profitability? Yeah. And that is a big deal. That's something that you need to watch. But for the most part, I don't think we need to focus that heavily on profitability. It's more important to focus on the holistic picture of the company. So right now, if we were to take SoFi's adjusted earnings instead of their GAAP earnings, and then divide that into their stock price, I think it would give them a price to equity ratio of around 30, which is high for a bank. Most small regional banks average a PE ratio of around 13.5, but also most small banks are growing at 4.5% per year, while SoFi is growing 10 times that amount. So if SoFi just kept growing at 40% per year, 3 years from now, their PE ratio would be 8. And if they did it again, their PE ratio would be, 2 or something like that. So you have to factor in both growth, you have to factor in profitability, but focusing too much on any one metric can definitely lead you astray.
Yeah, no, for sure. And I absolutely agree. So you were talking about the compounded annual growth rates of like their revenue right now or adjusted EBITDA, however you want to factor it out. How fast do you think SoFi will be growing? Do you have any long-term projections over the next 5 years of how fast this bank, let's say revenue to be more specific, will grow throughout the next couple of quarters or years?
Yeah, it's hard to say. It's really weird because most banks don't grow the way SoFi is growing. Most banks are very cyclical, and they'll basically ride the cycle down. And then if it's a good bank, they'll figure out how to ride the cycle back up. SoFi has this weird technique where they're super conservative with entering a new market. So like personal loans, for example, they're basically saying, hey, the personal loans market is massive. We only own 8% of it. So we could pursue that really aggressively, but we're going to be prudent and conservative is the line they love to throw out. And they're going to just kind of smooth that out over a longer time period. So it's really hard for me to estimate what their growth rate is going to be because it's so tightly controlled by the management of SoFi. I think it's easier to see what is their total potential and then try to work back from there. So they own like 70% of the student loan market right now. They own basically 0% of the home loan market, and they own 8% of personal loans. So imagine if personal loans got to 20%. Well, that doubles effectively the profit from personal loans. Imagine their home mortgages gets to 8%. That could be a 10x in their home loan market. And then student loans has nowhere to go but up. So that could double, could triple relatively easily. So you add all those together, I don't know what that averages out to. It could be SoFi being worth 5x more than it is today 5 years from now. And I don't think that that's incredibly bullish. I think that's kind of reasonable.
Right, right. So let me test your bullishness then on this stock. The stock was $4.50 about a month and a bit ago.
Yeah.
Ran up to $10. From what I know, I don't think you sold any of your position at the time. I think you're holding straight. What would cause you to sell right now?
The only thing that would cause me to sell would be SoFi stock price spiking incredibly high. So I think if their PE ratio went to like 100, like I've seen on some companies, that would probably get me to sell. I think that'd be around $22 a share, $23 a share, or something like that. The other
how do you can SoFi derive a PE without them being profitable, or is that based on their adjusted EBITDA?
You have to use their adjusted EBITDA basically.
Okay.
So yeah, I guess adjusted PE ratio is a little more accurate way to say it. But more likely, because I don't think they're going to spike that high, more likely the reason I would sell would be if there was some kind of what I see as an execution error on the part of the company, or I just catch someone in the company lying. So, Crystal Point says that SBC is going to drop to single digits by whatever date. If that doesn't happen, that's pretty concerning because you can't trust management. Or Anthony Noto says they're going to be profitable by Q4 2023. If that doesn't happen and there's no reason that that shouldn't have happened, that's a big cause for concern as well. I think that if you can't trust the management of the companies, then you really shouldn't invest in it, because the fact is they have more information about the company than we ever will. And if they want to manipulate that information, they can. So fundamentally, you just have to trust what the management is saying.
And I think more than ever, for another reason why I liked SoFi so much was how much information that management was giving in terms of what they thought about a certain particular area. Like whenever it was dropping down from $9 to $4, they can come out and say things are still great and everything like this. And, even a bunch of banks did that during the 2008 financial crisis. The difference is that Anthony Noto was putting his money right where his mouth was. And he was saying, things are okay. Everyone needs to relax. And I'm willing to bet millions and millions of dollars that it will return. And that's a different sort of picture. And now, like you said, Anthony Noto has been conservative for most quarters, right? Okay. Eventually, I think investors will have to give this management team a little bit more of execution credit, considering they continue to hit it out of the park. We were a student loan company for the longest time, and then completely pivoted our business in like an exodus of our largest market. We were doing 1/10 the total volume in our largest market, and survived and is now thriving, and now that's coming back. Eventually people are going to have to put a higher ratio on this company because of what Anthony Noto and the rest of the team have done. That's just how at least I see it.
I totally agree. And even more recently, when all those banks were going out of business, all the small banks like Signature Bank out of New York, I think they said in something like 10 days, they shifted from having 92% of their deposits insured to upping their average insurance per account from 250,000 to 2 million and making 97% of their accounts insured. That's just incredibly quick execution, which is not normal for a bank.
2 weeks, right? Yeah.
Yeah. You got to give them credit for that. That's really impressive.
Well, I think you said it at the start. They're a technology company and a bank. It's a different way of looking at it. They have the tech side very, very down pat, and that's partially because we're a Galileo and Technisys client as well.
Right. And I think people forget that Noto spent some time at Twitter too. I mean, he's a finance guy. I mean, he came from Goldman Sachs, but he knows the tech side too, or at least knows how to manage a tech company. Yeah.
Yeah. No, it's very exciting. So I don't know if you have anything else. Maybe this will be a great 30 minutes. But we are going to be pivoting over to some of the stocks that you hold. I wanted to ask you a couple of questions about Bill.com, maybe some CrowdStrike, maybe some Datadog. I'm going to have all of your links down below. I think you're just on YouTube. I actually don't think you have a Twitter currently or Instagram or anything like that.
Correct? YouTube is Fin Tek, and then I do have a small Instagram, Real Fin Tek.
Got you. Okay. Perfect. I'll put that down below. If anyone wants to see the rest of the conversation, there's a join link down below. But make sure you guys go check out Fin Tek's channel. But until then, bye for now.